Okay, shares of Tesla have been the weakest performer in the NASDAQ 100 this morning, one of the worst performers on the S&P post-results. And as we've been mentioning, Elon Musk warning of difficult times ahead for the EV makers, saying the company will be in a transition period for the next year or more. Sciver is a partner and industrial sector head at Hedgeye Risk Management and has been quite cautious on the Tesla story. Jay, it's great to have you with us. And, you know, I think one of the interesting things about Tesla is it is a company that is constantly pointing us to the future. What did we learn about what's happening today? And did we get any notable updates on where the company wants to be going after they reported quarterly results?
Yes, great. Thank you for having me on. I think that Tesla is a company that is in a highly competitive, oversupplied electric vehicle market, and it wants to sell investors on the idea that it's pointing the way to the future, whereas its R&D line and investment and free cash flow and ability to actually create the future by investing in its products and whatnot really don't match the narrative or the market cap or really anything that they're reporting on the financial statements.
So I guess we did hear, obviously, about some of the issues in the short term for the EV market, which you highlight is a competitive one, but also just because there's moving parts with incentives in the United States. On that future story, you know, things that come up all the time, autonomous vehicles, full self-driving, a potential fleet of humanoid robots, and more. What was the company saying about any of those things when they reported results last night? What was your takeaway from that?
In general, they tended to push out, for example, the new affordable car, the introduction of robots and stuff like that is finally silly, right? Like if you're looking at Tesla's investment in capital spending, R&D, the actual dollars simply don't match in any way. They're not even close to the kind of investment that Ford makes, let alone what a Google or actual technology leader would make. There's a reason why they don't have a lot of new products, new vehicles coming to market, because they simply don't spend on it. The full self-driving and robo-taxi narrative has been going on literally for a decade. I mean, it's really hard on some level to listen to the earnings call and tell the difference between what stories Elon is telling about the George Jetson future today versus 2018. I mean, it's kind of the same story. It's always 6 months, you know, a year, or whatever it is. But the truth is that their assets, their cash flows, their financials are driven by automobile production and, to a lesser extent, a very small energy business. And that business is in decline.
And so I guess at the end of the day, if there was something to ask for, would it be more transparency around operationally what's happening for? Like, what would be valuable to you in trying to better assess the business today?
I think some of the KPIs for the self-driving very limited launch in Austin, Texas would be interesting to see. They don't give a lot of transparency. They actually dropped a lot of sort of the key performance indicators across the company in this release, which is typical of a company that's entering a bit of a rough patch, if you will. The sort of the bullish part they tried to put out is that they're going to get this pre-buy activity ahead of the tax credit expiration in the US, which I think is probably not all that material, because the reality is that the number of electric vehicles that people can buy in the US is vast, and they're all oversupplied. And ASPs, the average selling prices, are down. You know, I guess they could give more transparency into the robot or whatever, but there is no actual near-term prospects of having a robot come into your house, into your laundry. And if you're an investor who believes that, you know, I don't think that necessarily we're going to communicate all that well. But that, I guess that would be interesting as well, you know, to have some more KPIs around that.
And then before I let you go real quickly, I was mentioning that in the last hour, U.S. President Donald Trump basically said in a post, he denied wanting to destroy Elon Musk's firms, saying he wants them to thrive. But the political dynamics, look, they're hard for anybody to ignore. There's constant headlines around them. Investors are reading those too. How do you think that relationship story between U.S. President Donald Trump and Elon Musk. How does that play into this story going forward?
I think it's been detrimental to the brand. I mean, it's been, and one of our comments was that Elon Musk is likely to disappoint the right in the United States in the same way that he disappointed the left. And I think to some extent that is played out, at least within aspects of Donald Trump's supporter base. So I think that the main issue for Tesla is a lack of new products, a lack of cash flow to reinvest in the business, and a highly competitive market, and that Elon's sort of antics on the side related to politics are incrementally negative. They take away some of the ease with which people can shop and purchase his products. But the core problem is that, he's finally, and I mean, also, if you're betting on Tesla being AI, I mean, this guy's got other companies that are pursuing AI, not necessarily Tesla. So I think there's a governance problem, there's a competition problem, there's a capital allocation and free cash flow generation problem at Tesla that is a lot more core to the problem than whatever Elon Musk is doing to, we have our own things we've written about why he's become so political that I won't necessarily go into here. But these are not the core problems of a business which is supposed to generate cash and reinvest in products and win in its markets.